Ladies and gentlemen, welcome back again. And now we begin the panel discussion entitled Safeguarding Investors in the Challenging Global Environment. Before inviting our moderator, let me briefly introduce him, Dr. Rifki Ismal. In Indonesia, he is the member of the National Sharia Board and the Deputy Director in Bank Indonesia, in the Central Bank of. Besides lecturing in some prestigious universities in Indonesia, he has published many academic papers in reputable international journals and reference books on Islamic economics and banking by international reputable publishers, such as John Wiley and Sons, Routledge, Springer, and etc. May I now invite Dr. Rifki to lead the panel discussion. Please welcome.
Yes, thank you so much, Mr. Akber. Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, it's a pleasure to be the moderator in the last session, which is a panel discussion. So as being said by Mr. Alibek, the title of our discussion will be Safeguarding Investors in a Challenging Global Environment. Alhamdulillah, we have three speakers, three panelists here in our list. As being listed in the agenda, we have Mr. Peter, who has spoken in the previous session. And then we are having also Mr. Akber Khan and also Mr. Noraizat, Shik Ahmad. Before we start, I think I had better also read short bio of the speakers, the panelists. First, Mr. Peter Casey is a consultant for the AFSB and a member of the Legislative Committee of the Dubai Financial Services Authority. He's also a member of the International Advisory Board of the Emirate Securities and Commodity Authority and a consultant to General Counsel for Islamic banks and financial institutions. Mr. Peter has been involved in standard development in IFSB in collaboration with other partners of the IFSB. Also is currently involved in the projects of financial infrastructure, financial market infrastructure, and development of Islamic capital market. Secondly, Mr. Akber Khan, I hope I mentioned your name clearly, or if it is wrong, please let me know. Mr. Akber Khan has more than 23 years of experience in the investment industry. Since 2009, he has headed asset management at Doha-based Al Rayyan Investment, or RE. Mr. Akbar is also responsible for more than $1 billion of asset invested in Sharia-compliant Gulf-listed equities and global sukuk, mashallah. So Mr. Akbar was a director at the Deutsche Bank previously in London, and where he spent more than 11 years in European and emerging market equities in trading, research, and proprietary investment roles. So currently, Mr. Akbar is the Senior Director of the Asset Management in RE. And then our third speaker is Mr. Noraizat. He is from Securities Commission in Malaysia. He's the General Manager in Securities Commission Malaysia. So Mr. Noraizat oversees the strategic development and operational aspect of the Islamic capital market in Malaysia. Prior to that, he was attached to the corporate finance and investment, where he was involved in various aspects of fundraising proposals, managers and acquisition, as well as restructuring scheme. Mr. Aizat participates in various speaking engagement and working group on the ICM at both local and international levels. So three of our speakers are very experts. Hopefully we can have fruitful discussion in this last session. So for the first time, before we begin again, since we have 50 minutes, I believe if I can locate like 10 minutes for each of the panelists, to just share their thought on the issues that we would like them to answer and to share with us. First of all, I think I would invite Mr. Aizat from Securities Commission. If you can please share with us, having had almost 2 years of pandemic in which it has impacted the ICM performance in some jurisdictions, can you share the Securities Commission policy responses to manage the performance of ICM in Malaysia? And then secondly, if you can also answer us, some countries have prepared exit policies to face most pandemic conditions. during the ICM, including the ICM sectors. Can you also share Securities Commission exit policies regarding this? Please, Mr. Aizat.
Recording in progress.
Okay. Thank you very much, Dr. Rifki. Assalamualaikum warahmatullahi wabarakatuh. And very good afternoon to all. First of all, I would like to thank IFSB and AIFC for inviting Securities Commission Malaysia for this event. It is indeed a pleasure to actually be with my fellow panelists. It is unfortunate we had to do it online. I think 2 years ago I was in Astana, Kazakhstan. Quite enjoyed the city as well. So don't know when we will be able to travel again. Hopefully, inshallah next year or or sooner. Okay. Thank you very much for your question. I think I will try to briefly answer the question that you have actually raised. For the SC, the policy responses were actually broad-based and not specific to the Islamic capital market, because this is a health issue which affected the entire capital market. Our responses actually centered on 3 key priorities. Number 1 is to actually ensuring stability and continuity during the crisis in terms of ensuring a fair and orderly market, facilitating business and providing reliefs, and maintaining market stability and managing risk. We took actions in rolling out regulatory reliefs to facilitate business continuity and maintain market operation. We took an instant that during that period, it may be difficult for intermediaries as well as issuers to actually comply with certain regulatory requirements. So therefore, we actually provided many regulatory reliefs. Some example included extended quarterly and annual reporting timelines, hybrid or virtual meetings by listed companies, waivers from listing fees for listed companies, waiver from licensing fees for intermediaries. Those were some of the reliefs that we actually provided for the market. The second priority was actually maintaining market integrity and good governance in terms of promoting good governance and transparency, ensuring market integrity and conduct, as well as protecting vulnerable investors. In ensuring market integrity, supervision and surveillance assessment were actually conducted on various areas within the capital market to ensure orderly functioning of the market. I think I just highlight two examples. In terms of investment management, we noted redemption patterns has been uneven, but cash and liquid asset help sufficient liquidity risk management is in place. For stockbroking intermediaries, stockbrokers are well capitalized, supported by sufficient liquidity buffers and healthy collaterals level to address any potential losses. In promoting good governance and transparency, we continue to emphasize on improving culture of corporate governance in the capital market. In terms of ensuring good conduct and protecting vulnerable investors, we step up our intervention and awareness measure in response to rising scams and unlicensed activities to protect investors. So during that period, a lot of scams, covering various aspects of capital market as well as the financial market. So therefore, we had actually stepped up our intervention. I think based on observation, rising number of complaints and inquiries on unlicensed activity and scams. And our interventions included, putting an alert list specifying which companies, a special task force also to actually focus on clone scams and unlicensed activity, as well as a website blog by our Multimedia and Communication Commission. We also intensify our awareness program. In terms of ensuring good conduct in the market, we continue to pursue swift and effective enforcement outcomes through the utilization of a broad range of enforcement tools. The third pillar is actually enabling opportunities and facilitating recoveries in terms of broadening the capital markets digital embrace, enhancing market diversity and opportunities, and strengthening the SRI and ICM ecosystem in terms of broadening the capital markets digital adoption areas across various digital segments for digital asset exchange, digital investment management, as well as e-services platform. In terms of enhancing market diversity and opportunities, we streamline product approval processes for for IPOs. We expanded the scope of advice that can be offered by financial planners. We liberalized convertible issuance for venture capital as well as private equity investees. We liberalized measures for foreign real estate for wholesale fund management. And finally, in terms of strengthening SRI and ICM ecosystem, we continue to actually strengthen the SRI system and enable greater advocacy of social finance and impact investing through the Islamic capital market. To answer your second question, I mean, of course, the capital market will remain challenging in the near to intermediate future as post-pandemic recovery period is prolonged. I mean, as we speak now, Malaysia still has not recovered from the pandemic. We are still in the movement control order. The number of cases are still high. The government has just actually announced the National Recovery Program comprising 4 phases. And the move from one phase to phase depends on the indicators. We are currently still in the first phase, not too sure when we actually will move to the second phase, third phase, and fourth phase. So in terms of exit policy, I mean, it's quite fluid at the moment. But nevertheless, I highlight some of the key priorities for us, Securities Commission. We will continue with the fundraising access, investment access, and digital inclusiveness. This will include enhancing funding access for both private and public needs, enabling greater investor options and access through enhanced advisory, unit trust, as well as private retirement scheme, and expanding digital outreach to the silver population. The second focus will be innovation agility, business growth agility, and being competitive in terms of enabling digital development and tech readiness, including our own internal capabilities. Continue to actually scale up SRI and leveraging ICM for growth in SRI. The final one in terms of regulatory ability, agility, and corporate governance indicator, ensuring effective regulatory actions and promoting self-reporting, strengthening identification of systemic risks through integrated and predictive risk surveillance, and expanding corporate governance to intermediaries and promote high-quality disclosures and audit. I think overall, perseverance and resilience will be needed as we continue the journey towards a new normal. Although the domestic capital market will be influenced by key global development, it is expected to remain resilient and orderly, underpinned by Malaysia's firm macroeconomic fundamentals, ample domestic liquidity, and robust market infrastructure and the supportive policy environment. In short, the Malaysian capital market will continue to play its role in financing the domestic economy and mobilizing savings despite this condition. I'll stop at that. Thank you.
Thank you so much, Mr. Noraizat. I think it's quite comprehensive efforts have been taken by the Securities Commission and Malaysian government in general. And then if you can see the performance of Islamic finance in Malaysia is still robust right now, alhamdulillah, despite the pandemic. So inshallah, we expect for better performance in the future. Thank you so much, Mr. Noraizat. So IFSB, we also conducted some surveys 2020 and this year, just to analyze and to monitor what are policy responses, also exit policies taken by some jurisdiction with regard to the earlier impact of COVID and ongoing impact of the COVID. And then including the ICM and the one that you said have also been taken by other jurisdictions, alhamdulillah. So I think you are in the right track here, and same as the other jurisdiction. Like others are also doing like suspending the transaction, probably in the very peak condition of the pandemic. Also, they have also postponing the report, also like providing liquidity in the market just to maintain the market confidence. But let me also ask Mr. Peter, just to ensure whether the global impact of the pandemic are also having taken by, having been anticipated, particularly on the ICM sector by major of Islamic finance jurisdictions. Please, Mr. Peter, if you can share.
Okay. The first thing I think which has been much analyzed is that when the pandemic was recognized as something that was going to have global impact around March 2020, there were very sharp movements in capital markets, which have been much analyzed. They began really with a flight to safety, and assets were moved out of emerging markets and into more or less safe havens. This was very rapidly followed by what has been characterized as a dash for cash. And it was at this point that major governments started to put liquidity into their financial systems on a huge scale, and we've heard about the kind of measures that they took. Capital markets regulators, again, as we've heard, really just tried to keep orderly functioning in the markets, but the liquidity injections came dominantly from central banks. What this then produced was a general recovery in financial markets. Now, it's always quite hard to analyze Islamic financial markets separately from conventional ones. They're influenced partly by the same thing, and there's not always separate data available. But what does seem to have happened is that the Sukuk market held up very well. Some of you will have seen one of the graphs that Amani showed early on, from which you can see that Sukuk issuances in 2020 were at their second highest level ever, down slightly on 2019. And it looks as though this is partly driven by governments seeking to finance the deficits that they are incurring to counteract the effects of the pandemic, and perhaps in some cases also the effects on them of lower oil prices. So Sukuk issuance has remained quite robust, and of course we've also seen IILM and other short-term Sukuk issuers contributing to the provision of liquidity. So the Sukuk market has remained very active. The other thing that's quite interesting is to look at the performance of equity markets. And of course, equity markets globally recovered quite sharply from the March fall and have actually been rising quite strongly. But Islamic equity markets have been rising much more strongly. And if you compare the S&P Global 1200 Sharia with the S&P Global 1200, it's very clear that the Islamic index has come up faster. Why is that? Well, if you look at detail, it's actually to do with allocation, and a much higher proportion of the Sharia 1200 is allocated to information technology and to healthcare, both of which have performed well, especially information technology. What makes me think Zoom might have been doing well? Yeah, how are we getting together? So actually the composition of the Sharia indices has meant that they've performed well. That is probably also a major contributor to the strength of the Islamic funds sector through 2020, where we've seen a fairly sharp increase in the average size of Islamic funds. And although we haven't yet been able to penetrate all the detail below that, the good performance of Islamic equities is probably a feature of it. So that's what's been going on so far. We, of course, still don't quite know how the world will recover from the pandemic. Everybody accepts that governments cannot continue to pump liquidity into the system at the rate they have been doing so far, and not without having financial crises of their own. So, but everybody is also fairly aware that this taper needs to be done fairly gradually. So probably markets will emerge in fairly good order. That said, clearly economies have taken a hit, even if economies appear to recover quite quickly, the price of that has been increased government financial deficits, which they will need to fund either through taxes or by other means. So yes, we cannot expect global growth to continue at the rate that it had pre-pandemic for that reason, but no reason to suspect that Islamic finance will do worse. One more point which I'd like to make, which just echoes something that Noraizat made earlier. I think one of the things we've also seen is an increased interest in the ability of Islamic finance to contribute to recovery in some of the broadly socially responsible sectors. And people are asking once again, how can Islamic finance and socially responsible finance work in synergy to, indeed, some people would say that, some people would say that all Islamic finance is socially responsible, but that's arguable. But certainly, how can the underlying ethics of Islamic finance help to support recovery? And more specifically, how can the various Islamic philanthropic instruments, zakat, sadaqah, waqf, and so on, be mobilized to help support recovery? I'm not sure we have answers to that, but I think one of the things that we have seen is increased interest in the question.
Thank you, Mr. Peters. Very interesting information from your side. And in fact, if I can also share with you, our PCP's indicators, FSP PCP's indicators also reflect that indicators in Islamic banks, Islamic capital market, and Takaful are still showing robust and still very promising, despite the pandemic, which is still going on. Alhamdulillah. But inshallah, we are still optimistic in the years to come. Yeah. Thank you, Mr. Peter. So we have heard the Malaysian perspective, also the global perspective. What about from the players? So I'd like to invite Mr. Akber, if you can share with us, what do you do in order to protect the investors in Islamic capital market during the pandemic? Secondly, how do you promote or how do you maintain the investor confidence during the pandemic? Yeah, in order to keep maintaining the activities in Islamic capital market, please.
Thank you very much. I would one of the things that Peter just mentioned, which I would echo, is when we're investing, and obviously as a Sharia-only investor, when we're investing, the rules of engagement, if you like, or the best practices that we have are not specifically only applicable to Islamic investors. They're applicable to investors per se in general, and we also obviously try and apply them. Our approach is not we are pretty good for an Islamic investor. Our approach is we're a pretty good investor. We happen to be Islamic. I think it has to be that way around. Being Sharia compliant is not a sales pitch all by itself. But to your point of how do you made two very important points, Doctor, and to your first point about protecting investor capital during yet another period of global capital market distress. And the financial situation is obviously pretty difficult. I think this was an unprecedented crisis for a number of reasons, particularly when you're looking at it compared to what happened in 2008, 2009, which was also a big global situation. And I think the key difference is that while they were both global crises, in the first one, we weren't actually worried about our personal health and safety. Yes, there was difficulty. There was if you go back to 12, 13 years ago, there was a situation which started in the US real estate market, and that spread to capital markets, and it became a global financial crisis. Credit froze. The financial system came to a standstill. But while people were worried about their jobs, and while people were worried about the companies that they worked for and the businesses that they owned, and governments were concerned, nobody thought they were going to have to fear for their personal safety. This was a bit like a war without any physical destruction, if you like. So priority number one for all of us, whether you're an investor, whether you're an asset manager, or whoever you are, was, will I be safe? Will my family be safe? This was a very different situation to any previous crisis. So that was the first challenge. Our investors didn't care about their assets. They cared about their personal safety. So again, it was a bit like having a war. Once we, and that process continued to different lengths of time. And we are seeing, there's been an enormous amount of discussion as to the dual tracked approach globally to people getting vaccinated. The rich countries are getting vaccinated first. The poorer countries are getting vaccinated last, as is generally unfortunately, the way of the world. Money talks. And that will continue to have implications over time, both personal and from an investment perspective, as to we have different waves that will, new waves of the virus that come up. How does that affect capital markets? How does that affect interest rates in different countries? How does that affect the Federal Reserve? How does that affect US interest rates, et cetera, et cetera? But to your point of how did we protect client assets back then, once everyone got over now it seems quite a long time ago, when back February, March last year. I think the first thing is obviously to try and assess from an investor's perspective, how long is this situation going to persist for? How long are we going to be in having this collapse in capital markets? Is this a buying opportunity or is this a selling opportunity? After you've had the initial sell-off, which started towards the end of February last year, and then obviously accelerated significantly during March. Because as investors, we're always nobody wants to be selling at the bottom. So you're always a bit hesitant. We've had a big drop. What should I do now? So the interesting thing is that the playbooks that investors with experience had actually worked against them. We always talk to our clients about we are experienced and our team is experienced and this is going to be wonderful. People who'd been through the 2008-2009 crisis felt that this is going to be a long, drawn-out process of markets digesting, stabilizing, finding a bottom, and then there'll be a gradual recovery with many false starts. 2020 was very different. And the primary reason it was different was the extraordinary amount of government intervention, which has been mentioned by previous speakers as well. And to put that into perspective, in terms of the effective printing of money that global central banks undertook, in the 10 years from 2008, it took 10 years for approximately $10 trillion to be injected into the global financial system. The same amount of capital was injected in less than 6 months last year. And as a result, just like we saw during the last crisis, the majority of that capital found its way into assets, into risk assets, into the capital markets. It did not go into building houses or building roads or constructing hospitals. Well, actually, it did go into some hospitals this time. But into schools or into the things, into infrastructure, shall we say? It went into supporting capital markets, and that's why, unlike 2008-2009, we saw the most extraordinary reaction in capital markets and this massive bounce back. So anyone who was using their experience to get ready for a long period of market weakness was completely the wrong way around, because there was this vicious bounce back, and a lot of experienced investors had to then struggle to play catch up to buy back what they had sold or the cash that they had built. So for us, protecting capital for investors required having views on how quickly this bounce back would happen. I don't think anyone really expected the amount of money, the scale of money printing that was done would be executed. But clearly, central banks learned a lesson from. It wasn't just investors who learned lessons from the last financial crisis. Central banks decided, forget about any limits that we have to our leverage or sovereign debt. Just print money now, think later. And so actually the best way to capitalize on what happened last year, had we had a crystal ball, is actually as an investor or an asset manager, you would have not raised cash at all, which would be contrary to what people have thought. You would have just shifted from towards the most risky assets, because those are the ones that actually bounced back the most, which is completely contrary to what you would normally expect. but that's the advantage of having the benefits of hindsight, shall we say. So, I mean, in our particular case, we obviously went a little bit defensive, but then, I think as we understood what was going on and realized and saw how central banks were reacting, we were able to then, that's where our experience actually did pay off, because what happened is consumer spending didn't collapse. It just got shifted. We stopped buying services. We started buying goods. We stopped going to restaurants. We started getting home delivery. We stopped going to shops. We started using on e-commerce and getting things delivered to our houses. We didn't stop spending. It was just moved to different places. We stopped paying airlines any money. We stopped paying hotels any money, but we paid other people money. So as an investor, if you're able to understand the shifts in spending and capitalize on that, that's really essentially what we get paid to do. So protecting being prudent with client money in 2020 was about A, understanding how central banks were reacting, B, understanding the shifts in consumer and spending. And now what's still continuing is you're seeing an extraordinary boom in commodity prices, which obviously, depending on whether you're a buyer or a seller of commodities or a producer or a consumer, you have very different views as to whether that's a good or bad thing. But again, as an investor, our job is to capitalize on this. And this is a function of COVID-related supply constraints, bounce back in spending, the fact that far more money is being spent as a percent of the average basket, average consumer's basket on goods versus services. We're still not spending on services as much as we used to. We're now still spending far more on goods. And again, so this is continuing towards that process. As Peter mentioned, Sukuk did extremely well, and some equities did extremely well as well last year. And I think partly some of the trends that have been secular trends in the Islamic capital markets for a while are continuing to play out. And one of the things is that Sukuk have been structurally undersupplied for decades. If you look at the largest Islamic banks and largest takaful companies in the world, so i.e. the people who can only invest in Sukuk on their balance sheets. So let's ignore, for example, every other investor who's agnostic. The balance sheets of these companies globally have been going steadily as the countries within which they operate have seen GDP growth, as the populations have seen growth and deposits and insurance premiums have increased, and they have to invest their assets into the Sukuk market and into the equity market. A large proportion, it goes into Sukuk. Unfortunately, Sukuk supply has not increased at the same rate as the growth in these balance sheets. And hence, we have a long-term structural undersupply of Sukuk. And hence, Sukuk as a sub-asset class within global fixed income, whenever there is times of distress, like we saw last year, have always outperformed, because whenever there's any sell-off, there are always buyers waiting in the wings because there is a structural undersupply of Sukuk. So Sukuk, in times of distress, are very defensive. However, when there's aggressive rebound, then they underperform that rebound because obviously the bonds, let's say, which are the most distressed have fallen 10, 20, 30 points. They bounce back the hardest. Sukuk fall the least and rebound the least. But one of the other things that has continued to happen is that, particularly if we look at the Gulf, where we have very, very high credit ratings at a sovereign level, the yields that are available in the Gulf region on a credit rating adjusted basis are today and have been for the last 5 or 7 years the highest in the world. So by that, what I mean is, if you take some of the higher rated sovereigns in the region, Abu Dhabi, Kuwait, Qatar, which are AA, AA minus, AA plus, the yields that are available at a sovereign level and at a quasi-sovereign level are far, far, far higher than similarly rated credits in Europe or the US, etc. So to get the same credit quality, you cannot get the same yields as you get in our region. And so in our region, we've benefited significantly, at least on the fixed income or the Sukuk space, from this hunt for yield in the very low global interest rate market. On the equity side, we have also seen the same trends that Peter was mentioning, where the Sharia compliant indices of the local markets in our region, and in fact it's the same in Malaysia as well, have outperformed the conventional indices. And a large part of that is that in most markets, banks are a large part of the domestic stock market. And Islamic banks, again, because of the safety of an Islamic bank, because of the structural, the greater collateralization that Islamic banks have when they are lending, they are seen to be, they not only are seen to be, but they end up with having the performing far better during times of crisis in terms of the damage to their balance sheet, in terms of non-performing loans, etc. And investors recognize that. So if you take a similar basket of conventional banks in Malaysia, in Saudi, in the UAE, in Qatar, in wherever, and compare them to the Islamic banks have significantly outperformed. And if banks are a significant portion of an equity index, then by definition, the Sharia compliant index will outperform. So I think one of the nice things that one of the interesting things that this crisis again showed is that during times of crisis, an Islamic approach to investing does end up with better results because of the inherent risk management framework that is inherent to Sharia compliant companies.
Yes, exactly. Thank you, Mr. Akbar. Very interesting and very comprehensive argument. So we have completed the first session. Yeah, I think a very informative session. And I would like, we have already had two questions actually from the participants, if I may raise. The first question is to Mr. Aizat, please. So the participant is asking, can you please tell us more about the digital inclusiveness program and how does it apply in the Islamic capital market? If you can share your thought within 2 or 3 minutes, please. Mr. Aizat, you are still muted. I'm sorry. Can you please unmute?
Sorry. Okay, sorry. Okay, thank you very much for the question. I think when we talk about digital inclusiveness, I think we're talking about providing access, to investor via digital platform. I think we have a few digital investment management offering products via digital. On top of that, we also have many registered market operators in terms of offering equity crowdfunding, in terms of offering P2P financing to investor. So these are some of the digital initiatives that we have undertaken. On top of that, we also have approved 3 digital asset exchanges to enable investors to actually invest in digital asset. And we also are looking at coming out with a framework for initial coins offering or ICO. So those are some of the digital initiatives that we have actually put in place to provide inclusiveness, actually to cater to a broad range of investors within the capital market segment.
Okay. Thank you so much, Mr. Aizat. Very, very clear. And in fact, as we know, almost all of the jurisdictions are applying a more intensive digitalization, including in capital market. So there is also a question to Mr. Peter, please. Someone is asking, is there a high demand on short-term sukuk? What is the easiest structure, in your opinion, for such issuance? Any example? Mr. Peter?
Short-term sukuk, I think, have a somewhat different function from long-term sukuk. The short-term ones are really issued largely as instruments for liquidity management, especially by Islamic banks. As such, they correspond more closely to treasury bills than to other instruments. Let me track that. Central banks have therefore begun to issue them to provide liquidity to their Islamic banks. And one of the things that has changed in the last few years has been the introduction of liquidity ratios, which have required the holding of high quality liquid assets. And one key feature for something to be classed as a high quality liquid asset is that it must be tradable. And that has actually made a difference in practice, so that whereas before that some central banks were issuing instruments under contracts like Salam, which is not a tradable contract. Central Bank of Bahrain was issuing a lot of 3-month bills using that contract. Now there's been more emphasis on at least shifting the balance towards the tradable contracts. The one that seems to work most easily for central bank issuances has been Ijara, and so that's been seen in Central Bank of Bahrain. I think there are other possibilities. Say Wakala, I think, could be used reasonably for shortish term issuances. Some of the other contracts, things like Mudaraba, are a little bit less suitable for short-term issuances for technical reasons. So I think if you're going to go into the short-term market, the easy place to start is Ijara. The other possibility is Wakala, with the money being then invested in some package of Islamic, of Sharia-compliant assets. Is that a necessary thing to do? It's certainly, I think, a highly desirable thing in terms of developing an Islamic money market in the jurisdiction. Islamic money markets have generally been relatively weak because of the limited instruments available, and having short-term sukuk available is a huge help, and they are indeed in substantial demand, as we've already heard, from Islamic banks in particular, to a certain extent from takaful companies, though takaful companies typically have rather longer time horizons and less demanding short-term liquidity requirements. So the very short ones, yes, Islamic banks, and probably Islamic market money funds will grab any they can get their hands on that the banks haven't taken first.
Thank you, Mr. Peter. Just to add more information to what has been explained by Mr. Peter, in FSB, we are now constructing a standard regarding liquid instrument for maintaining any short-term liquidity pressures. So hopefully by having this standard, it can also assist the industry when we have unprecedented conditions. The last question would be, since I believe we need to end the session within 15 minutes time, in my watch, referring to time difference between Kazakhstan and Malaysia, so we still have like 7 minutes. If I can have explanation from Mr. Akbar, there is a question from participant to you. Has the pandemic affected the development of Islamic finance in Qatar and in your company? If you can share your thought, please, Mr. Akbar.
Sure. Interesting question. Well, we're an Islamic bank. So we're an Islamic asset manager, and we're owned by an Islamic bank. So we only have one way of operating, and that is in a Sharia compliant manner. So at a company level, we continue to do what we've always done, which is being an Islamic financial institution. So pandemic or no pandemic, it doesn't really doesn't make a difference. As I mentioned earlier, Islamic banks have certain benefits in terms of collateral, etc., which helps them and allows them to weather the storm better than, say, a conventional bank. As far as Qatar is concerned, it's interesting that of the larger banks in Qatar, there are a number of, and in Qatar, interestingly, you are, from a banking sector point of view, you are either an Islamic bank or a conventional bank. This distinction was made many years ago, where there is no such thing as an Islamic window. So that was cancelled. So you're either an Islamic only bank or a conventional only bank. And so while the Islamic banking sector has continued to grow and actually has outpaced the conventional banking sector, and this has basically been the case for the last 5-7 years. The last 18 months has been no different. At a sovereign level, interestingly enough, and the state oil company just issued $12 billion of bonds yesterday, there hasn't been a great deal of interest in issuing Islamic paper. There is only one sovereign sukuk that is outstanding. There was another one which is matured. And the new issuance, which was just done by the state oil company, was 4 different tranches of bonds, 5, 10, 20, and 30 years, and they were all bonds, and it was massively oversubscribed. interestingly enough, just as a comparison, the Saudi state oil company, which is called Aramco, also did an issuance last month, and that was 3 tranches, and all of Sukuk, that was $6 billion. So in Saudi, I think, so the answer to the question was about Qatar, but I would say that within Qatar, while the private sector is growing very strongly on the Islamic side, the sovereign probably, and the sovereign has been less, as an Islamic investor, I would say this, less good at tapping the demand from Islamic entities. And other countries in the region perhaps have been better. Oman did a 9-year sovereign sukuk last month. As I mentioned, Aramco has just done one as well. So so unfortunately, at the sovereign level, there hasn't been more sukuk issuance, but the private sector, there continues to be.
Okay, thank you, Mr. Akbar. Still have like 3 minutes. If you can share your thought, Mr. Akbar, a very short one, because there is a very interesting question here. Considering that derivative is not allowed in Sharia, yeah, particularly in majority of scholars, yeah, they don't allow any specific like derivative of speculative activities, including in the ICM. What do you think? Is there any high profit rate in Islamic investing nowadays?
So it's an interesting question.
Yeah,
I don't think
answer it shortly.
Sure. So it's a short question with a long answer. I don't have that much time, so I will make a few short points. Firstly, there are many scholars that have approved derivative-like structures which are Sharia compliant. So that allows many Islamic banks and treasury desks to execute certain structures and certain agreements in certain ways. Whether you're in a treasury desk or an asset manager, that is possible to do. We as an asset manager don't do that, but there's certainly treasury desks and banks that do those. So I'm not sure if the first part of the question is entirely true. It is in certain jurisdictions and for certain countries, but not universally. And that leads into a bigger discussion as to what is Sharia compliant and should we have a global standard, which is probably a whole panel discussion by itself. The second thing is, just because you don't use derivatives, it doesn't mean you cannot get good returns. Derivatives are effectively a means of getting a very large amount of leverage. There are ways to leverage in an Islamic way without using derivatives, and you can get returns. And there are ways of investing in sukuk or in equities, which are Sharia compliant, which where you can make very large amounts of money. When we're looking at, for example, some of the equities that we have in our region, and some of them have our best performing, the stocks that we've held this year, some of them have doubled year to date. I'm not sure you need a derivative to generate that. That's plenty of return. I'm not saying the whole market has, but there are returns available. So derivatives per se or leverage per se is not the only way of getting good returns. Investing in undervalued assets is the best way of getting good returns.
Exactly. Very clear, Mr. Akbar. So I think we can conclude the session, even though I do wish to have more discussion with these 3 prominent speakers. Yeah, but from the information, from the thought, and also arguments coming from these prominent speakers, probably we can have 3 main conclusions. First, inshallah, we do believe that ICM is still robust despite the ongoing pandemic. And then secondly, in the earlier impact of pandemic, and even in ongoing pandemic condition, we still can see that the liquidity and the market confidence is still there, even including the investor protection. So alhamdulillah, investors are still being protected. And then facing this, we are still very optimistic that the next or the future of the Islamic capital market is still very promising. Even this one is also confirmed by our survey. Again, IFSB conducts survey this year, and we have also being informed by our major players, major Islamic finance players, and then they said that there might not be any significant problems in the ICM. So they do still believe that the issuance and then the trading, the liquidity activities in the ICM are still being promising in the years ahead. So by having that, I would like to highly appreciate Mr. Akbar, Mr. Aizat, and Mr. Peter for having with us in the panel and also giving us a lot of information, thought, arguments, and very fruitful information. Thank you so much. Stay safe. Yeah. And Assalamualaikum warahmatullahi wabarakatuh. I refer to Mr. Ali Beg, please.
Thank you, Dr. Rifki, and the respected speakers, Mr. Noraizat, Mr. Akber, Mr. Peter, for a very informative session and rich discussion. Your Excellencies, distinguished guests, ladies and gentlemen, I believe that all of you enjoyed the seminar and gained knowledge through the fruitful discussions. I observed an excellent presentations and contribution by today's speakers and experts. I must say that I can conclude that the purpose of the seminar has been completely accomplished. On behalf of the Islamic Financial Service Board and AIFC, I would like to express our gratitude to our speakers today. Finally, on behalf of the AFC and AIFC, thank you for spending time with us today, and we're looking forward for your future participants. Thank you once again, our honorable speakers, for your session. Stay safe.